Okay, let's talk about pension and saving for retirement. Maybe that's where Muyo will actually now be able to bring complete, it's all joy and nothing else. Christine Karoki is the head of pensions at UAP Old Mutual. She joins us now in the Situation Room. Good morning, Christine. Welcome. It's good to see you. It's good to have you in the show, and we are glad that you were able to join us this morning. So, having woken up early to come and join us, we're not going to make this a very difficult session for you. We'll make it a very, very nice and easy session for you. You're coming to teach us and explain to us why people need to start saving for retirement, and then what the benefits are, and the various ways in which one can save, and then the various ways in which one can enjoy the benefit. So you've been in this industry for a while, I presume. For you to be head of pensions at UAP Old Mutual.
Well, I've been around a little bit.
Around
19 years or so. That's not a lot. I'm just getting to the middle of it.
Okay.
Yeah.
19 years.
Yeah.
Just talking about pensions.
Yeah. No,
Or just
in total,
insurance.
in the financial sector, which is insurance. Because we are in the financial sector.
All right.
And that's the perspective you always have to, that whether the sector is to provide a solution and financial security. So I've been in it, left university, you know how it is in Kenya. Sometimes you struggle with vision, direction, placing yourself, finding a job. And so I was fortunate enough through my own personal initiative to be employed by an insurance broker. I did leave science. I did a Bachelor of Science at Chiromo. But my view is that you are trained for a discipline, but it has skill sets. And skill sets are transferable between disciplines. So I transferred my skill sets to insurance.
All right.
So I did start generally in general insurance, did what we call medical insurance also, a bit of administration. Then as I developed in my career, while I was still in insurance broking, I did experience what we call employee benefits, where you look at a range of benefits that employees can receive. And this is mostly corporates. I'd not had a vision for retail then. And so I did work in that. And then when I moved to my second job, I did work in pensions for quite a bit. And then for 3 years, I then went back into insurance, which is corporate insurance for employees. But now I'm back to my first love, which is retirement benefits.
You call it first love. Why?
Because for me, I feel when I talk to people and I give them the vision that I have for pensions, I feel my heart beats. And I feel, when you walk away from someone and you've had a conversation, and not just on retirement, you feel, you know that warmth in your heart, your mind and your heart connect, and you feel you've done something. And for me, I live by the motto that the values I have as a person should be the things I do on a day-to-day basis. And that's what I get to do. Give people solutions. Sometimes it doesn't end up to what I'm employed to do, but basically if I can give you an idea, if I can give you a scope, if I can give you a perspective that helps you form a goal. And for me, a lot of the goal is people shouldn't be leaving employment and they have no bread on their table. People should not leave employment and you're going mashambani and it's blank. You're the same as a 20-year-old. You've worked for 30 years, but your future is blank. When I'm going to work or I'm walking, I see a watchman, he's 60 years. This man did work, but he can't stop working because he needs to place food on the table. So there are those things you look at people in society and let me use Kiswahili, zinakukwaruza, you feel in there, down, something is wrong. So that's why I'm saying that's the thing I wake up to do.
The concept, the very idea of insurance, when you hear it, it sounds really good. When you're told about it, the person who wants to sell a policy to you and wants to explain it to you, it is beautiful. But what I often wonder is something this wonderful and this beautiful, why is it that more people haven't taken it up? Is it because it's not affordable for most people? Is it that it isn't tailor-made to suit the needs of the majority of people who may not have the sort of money that is required? Or is it that it isn't sold or packaged in a way that people find attractive enough? Because if I look at the database of KRA and the people whom KRA manages to tax, it means those people have something that they can tax. And only a very small fraction of those people are insured. Very small fraction. Why? As I was saying earlier, Eric, a very small fraction of those people also are bankable. They have bank accounts. So what is it about this product which on its own is actually a good product? And why is it that other people don't buy into it? It's what concerns me, because the pension then comes later. You start off when you're young, so the idea of that future becomes easy. But unfortunately, again, for most Kenyans, people live from hand to mouth on a daily basis.
Yes.
So when you tell them save, you tell them pension, they say, good idea, but save what exactly?
Yeah. Okay, very valid points. But I'd just like to maybe split the opinion. When you look at insurance, there is what is called risk, which is what we buy. Like I had a conversation about motor insurance or medical insurance. Then there is savings. And savings usually are when you put money aside and this person has promised you that they will invest it on your behalf within certain parameters and then give it back to you. Now, City, you've raised a very key point. Why is it that Kenyans are not taking up these good things? So I think this is my opinion based on my understanding. One, there's a lot of penetration is because of lack of penetration is because very few people, if you talk about it, the urban population in Kenya is like 20% of the whole population of Kenya. So you find knowledge is not very widespread. And the responsibility of spreading this knowledge should not be left to the government only. We, even as people in insurance, the insurance companies, other stakeholders should be able to talk to people. And you'll find that where effort has been made, if you look at people like, say, crop insurance, livestock insurance, in areas like Kitale, it's very heavily taken because these people know the risk of what they're doing, and someone has taken the initiative to go there, talk to them, they see the value of it, they have experienced it, and they have seen it come back to them. Now, the same principle applies to someone like me. By virtue of the fact that I'm in insurance, I know that insurance works, so I pick up policies that work. Additionally, there's the issue of full disclosure. Someone will come and I'll tell you, Eric, I have this thing. You put in 1,000 a month, you will get
10 million.
10 million in 10 years. But I don't tell you, by the way, if you stop before the third year, you will lose. You will not have any value of whatever you've started.
Yes.
You need to continue for this period of time. I also need to tell you that the investment return is averaging at 4%. Then you, as an individual of sound mind, will say, but if I put my 1,000 in a T-bill, I will earn 7.5% because that's what they're averaging. Then you'll be like, why would I invest in 4%?
Yep.
So then I tell you, by the way, the 4% is just a risk. There's a portion of it that is insured, and that's why you're earning a lower than a T-bill. If X happens to you, this extra value,
the expiry of the term,
this extra value will go to your beneficiary. So there's also the issue of full disclosure. Additionally, fit for market products. We have traditional ways of actuarial reviewing. Now I'm talking about risk, which is outside of savings. And sometimes if you're dealing with someone in Gikomba, they want to save 20 shillings a day. But when they are viewed, they are high risk in terms of the way the risk is. So then it's very hard to craft a product for this person because of the traditional views. So it's a transition because these products are coming out. They are not very well known, but I know in a few years, people will have fit for market product because even our market is different from Europe. So our products need to be also.
They need to be different.
They need to be different.
They need to be tailored to this market,
Yes.
for this market.
Yeah.
Christine, if we look at the number of people who've taken up, who are in pension,
Yes.
not those who are in pension because it's a benefit in employment, but those who individually have decided, I'm in a pension scheme, I'm going to join a pension. How many are we talking about?
I wouldn't have the numbers.
You can estimate.
In terms of percentage.
You've been around for a while. I'm just going to use your own words against you now.
In your journey around, the
Statistics are not, I don't have the statistics, but what I would say is that the individuals who save in retirement funds are not, a lot of them, if I can say, are coming from employed offices.
Okay.
Not some of them in the informal sector, but I would like to say that majority, and this is my estimation based on the profile of the clients I have seen in individual plans, are already in employed schemes. Why? Because employers will look at it and say, so we are a three-tier system in Kenya. So you have the NSSF, then you have what employment-based schemes, which is occupational and umbrella, and then you have the individual plans. So you've asked about the individual plan. So you find this person has worked for various employers. So if anything happened to you, my family would not know my first employer was company ABC. So what they do is we do consolidation. So as you move to different employers, the benefits you've accrued from previous employers, you consolidate into one fund. So that forms also majority of the schemes. Then you have maybe employers who are not registered in Kenya, and they're saying, as in your contract or even consultants, you will have a benefit. So you find the company you want to participate in, you find the employer you want to be with, and then you open a plan and I will make my contribution to it. The other is you have now individuals who the employer does not give them benefits. So they say, okay, I don't have a benefit, but I need to take up a plan, because if the returns are averaging maybe 8% and other schemes are averaging 10%, it's a good return. And I'm looking at a 5-year. If you look at medium term, you're looking at 5 years. There's also look at 10 years. And then there's the 30-year timeline. So they said, I want to invest. So they start it on their own. So I would say, if you look at the population between occupational schemes and personal plans maybe contribute around 30%. And then majority of the profile of those are people who are already employed. The challenge has always been Kamau hardware. Convincing, as City said, convincing this person that you and your staff need to have a 10-year timeline of retirement. City is just happy. Yeah, because it's very, when you talk to informal people, because these are the people I talk to on a daily basis.
So what is it that, what's this barrier?
The barrier is, first, is my money safe?
Okay.
Will I get my money? So that's the first barrier. The second is I find lack of understanding. So break down, don't speak technical to this person. Don't give them a brochure. Give them point 1, you do this, point 2, you do this, point 3, you do this. And then after a year, review with them. And you find you get converts. I've talked to a flower guy, the guy who sells me flowers on Gong Road. And some while back, and we had a conversation, and I asked him, Mr. Maura, what do you do? You have all these people you employ, but you yourself, what do you do? And we had a conversation. And his was, okay, so I save. Then I said, if you save in an individual plan, you save project-based. You don't have to have a 30-year timeline. So you're saving for 5 years and then you access those benefits because the law does allow. And so he said, okay, and he started. And so I think genuine conversations without hiding the bits and, and having technical
You've repeated
language.
that a number of times, and I'm very happy that you're repeating that. Disclosure, full disclosure, hiding, technical jargon, small print. We'll talk about that when we come back out of this break. It's 25 minutes after 8. This is Kenya's biggest conversation. We're talking about pension today. So we had a conversation earlier about insurance and insurance products and diversifying products and even using technology to diversify insurance products. Today, let's talk about the same things, but now pension. Pension products, pension plans, using technology, diversifying pension products and plans, and how we sell them. With us in the studio is Christine Karoki. She is the head of pensions at UAP Old Mutual. Keep it right here for more conversations coming up after this quick break when you take a look at the weather and traffic. Good morning. We're live on KTN Home, SpiceFM, and we are online. With you in the room this morning is Eric Latif, CT Muga, and our guest, Christine Karoki, head of pensions at UAP Old Mutual. We are talking about the importance of saving for retirement. Christine, as we were talking about this, you're saying you're passionate and you go and talk to people and you're telling them the benefits that they are likely to get out of saving for retirement. And this is the difference. This is saving with an insurance component as opposed to just taking insurance. And if you don't claim, the year goes, it goes. This is saving. When you go to the person, for example, that you refer to, Njoroge Hardware, and you are telling them, you can take up some scheme, a plan for your retirement benefit and also bringing your staff into it. They're looking at you and they're thinking, you want my money and you want me to give you money on behalf of my staff. You're competing for the same amount in the wallet with others. Who are these that you're competing against?
So the share of wallet you're looking for in the Kenyan scenario would be SACCOs, because they're well entrenched and they do work in terms of people being able to access credit and loans. You're also looking at table banking, which is very wide in the informal sector, the merry-go-rounds. You're looking at a normal bank. People feel secure putting their money in a bank. You're looking at different scenarios, even family associations. They're very popular for us. You'd be surprised that Kenyans then have never thought about NSSF. They know they put money in NSSF. They've never thought, if I take 400 times 12 times 30 years, I end up with 144,000 Kenya shillings at the end of the period. So that's who we are competing with. So you have to elicit, you have to show value to this person. You have to show security, and you have to show the reason why this is one of the options. I'm not saying it's the only option, because when you're planning for your retirement, you look at a whole aspect of it. First of all, there's a financial aspect, there's the emotional, and then you plan what to do. Because many people get there and they're like, okay, now I need to think, do I have an activity? And I'll say this mainly because we've also done post-retirement in terms of working with the regulator and consultants in the market to just sit with people who are 45 years and above and just have a conversation and say, where are you at in your headspace? And it's because I'm on the financial side, I've also understood that it's also important to look at other aspects. And you find, sorry to say this, that they're women, because they have all these other activities, life just moves on. And the men go home and they are lost because you didn't
lose identity, lose purpose, lose everything.
They might have the financial security, but there's, yes, you've said a very key identity. Are you working on your identity? Because a lot of us, even when you go for social functions, hi, I'm Christine Karoki, UAP. No, I'm not Christine Karoki, UAP. That is one facet of my life. What other facets of your life are you going to drive after you're gainfully employed, or if you're an entrepreneur and you've slowed down, you're not going in 5 days, someone has taken over the business, maybe your children. So that generally is it. Now,
when you want to introduce a product like, say, pensions to an individual, that Njoroge Hardware, it really got me thinking, because it reminded me of actually a friend whom I have. And he has an hardware, and I immediately thought of him, and I thought of somebody going for insurance. I started laughing because I realized you're not going to sell that thing to that guy. But part of the reason is because, and this is the question I want to ask, do you get to find out who this potential client or how this potential client views this subject of retirement? Do you get to find out how they understand insurance and what? Because when Eric talked about the competition, you can look at it as a barrier. The barrier here is not ignorance necessarily on their part, but on your part, because you may be talking to them about something which they think they have. But because you're talking at cross purposes, and you are introducing the subject as you understand it, and he also, she understands the way they do, yet, if you understood what these individuals understood by this very concept and what it is they thought they ought to do with it, then the very product that you want to introduce could be tailor-made and introduced in a far easier way that makes it easy to accept.
Yes. So I'll tell you for a fact, I don't speak on a product basis when I'm going to visit somebody or when I'm having a conversation on retirement. I speak from a solution perspective, which is what you've spoken into. This person is looking to save. This person is looking to grow their money. This person is looking to have security. So in essence, what you're saying is, you look at this person and ask, what do you want to achieve? If I'm looking at a 30-year-old, someone starting out in work, someone getting established, they do not have a concept of death. They do not have a concept of benefits for beneficiaries. They do not have a concept of retirement. Retirement is an abstract concept to them that does not make sense. So for this person, you tell them, look here, this is a fund you can put money. This fund is a tax shelter. So you will reduce your tax liability from any work you do or any salary you receive from your employer. When you're getting this money, you did have a tax benefit in that the money went in tax-free. The income is not taxed. At the end of it all, there are tax-free advantages and then the taxation on it. So it means that you reduce tax on an investment you've had. If you had invested it from your salary. Secondly, you're telling this person, what do you want to achieve? I want to be going on holidays. So you have a 3-year timeline. Do you want to accumulate? So you goal set. And I think for every person who wants to save, whether in a SACCO, whether in a retirement fund, it's always about goal setting. If I'm talking to a 40, 45, 50-year-old, what they're looking at is they're saying, okay, so I've done all these different things. And you could be financially secure. But then you're talking about what's your portfolio like? 80% of your assets are in land. So you ask the person, is this how you should be spread? If you started putting money in cash accessible, and this is a cash accessible, just like a unit trust or a bond, then you're in a better position. Secondly, you find that there are people who, I know, for myself, because I've worked and I'm not a business person, taking money and then you can invest. You have a bit of knowledge. But I know when I get to the end of it, I'm building up a fund because I want to convert it. Somebody will invest it on my behalf, and every month I receive a certain amount of money. So I've goal set and said, as Christine, I don't want to get the whole lump sum I've saved. I will give someone over in the provision, and this is now what we call post-retirement. And they will do their work for investing, and me, all I need to do is get a projection. So right now I've looked at a projection and said, if I have 10 million, roughly I'll get between 95 and 98,000 a month as a salary for the rest of my life, what we call annuitization. So then that means, I need to build. If I want anything above that, if I want to get 10 to 10 million, that is how much I'll get. So I goal set. Then I say, all these other endeavors you do, because we speak from a holistic point of view. And if you're doing it right, you will speak also to your client about financial literacy, not just consuming the product. Right now, you talked about technology and platforms. A lot of the changes that we have also done is to allow that you have what we call financial wellness. So you find that when a client, you have sessions and activities with these clients of yours that allow them to build up knowledge and a bit of muscle. so that then it's not just this one thing. You're not giving them a full stop solution, but you're giving them around a part or a piece that gears them towards financial security.
So really, the person you want to talk to is not necessarily the person who's employed, because the person who's employed has already been introduced to some of these products. Employment affords you, in many cases, insurance.
Yeah.
It affords you pension in one form or the other.
Mm.
So this is somebody who, if you talk to, they're already familiar with the subject. But somebody who isn't in, should we say, paid employment, on the other hand, this is not something that they deal with. If they had been in employment, they would be. And yet, right now as we speak, conventional banks are also now offering literally everything that you people offer. Just like you people are also literally almost pretending to offer what banks offer for financial services. So, how then, when somebody hears this messaging, because they start wondering, okay, so an insurance company is a financial institution. It actually is. And insurance companies even tend to have even more money than banks. Now, many people don't seem to know that, but it's true, they do. Okay? Because their money just tends to sit there. It tends to. I am speaking as a layman. Now, the question I asked earlier on is what I still want to ask. How do you get this person? Not when they start employment, because that already, they've already figured out what they want to do and how they want to do it. What does your industry do to ensure that these products, these concepts that are useful, that are good, that are beneficial, are part and parcel of the understanding of somebody who has a future in business or an employment? Meaning, from the point when they are still at school, what does insurance industry do? Because in my mind, that's where you get this person to understand this concept.
You're actually right in terms of where the knowledge should start trickling down to. It is the person who is a teenager, so that they understand where they're going and what they need to do. So a lot of it, you find that there are partnerships. They're not to the level that should be there. There are partnerships where people sponsor events. They go into schools and they do talk to people. But I did start by saying that awareness is one of our key challenges in terms of bridging that gap of reaching people. And what I would, in my own opinion, say is that we've not reached that level.
Why?
Because, well, City right now, I don't think I'd have a very concrete and analytical analyzed answer to that. Maybe because initiatives have not been as successful and breaking down information, but I do know what work has been done. So if you find that if you search for all platforms, you talked about technology. So websites have been improved quite a bit, and you find that they're able to get you information on these products.
Okay.
Additionally, if you look at initiatives that are running with various associations, whether it's IHRM, whether it's accountants, lawyers association, these are associations where members usually set up their own shop, doctors. So there's a lot that has gone into working with those associations so that the information and the knowledge is trickling down to their bodies. And you find that for all of their CPD learnings or their conferences, there's part and parcel insurance or a circle right there having a conversation with these people, because we've recognized that it is very important to have a conversation with these people. Now, in terms focusing on retirement benefits, I give kudos to the regulator. We do partner with them quite a bit. Like right now, we are discussing open initiative that's supposed to be in Kisumu. We do go to places, Mandela, Kisumu, and you sit, and it's like like how ASK show used to be, like a fair, and you get masses and masses of the public coming through, and people get information and knowledge. We haven't been able to penetrate everywhere, but I do say that this has been happening quite a bit.
I think the effort is laudable, but you see, the regulator is a part of government. Okay? Now, let me tell you where I was going with this. All these initiatives that are part and parcel of our lives and that play a really important role this is a view, it's a pet view that I have, and I always express it. It ought to be made part of the education system from an early age. And when I bring in the government, you see, the conversation you also ought to have is the Institute of Curriculum Development. Why am I telling you this? I look at countries, first world countries, where this is part and parcel of everyday life. And it's not something somebody even second guesses. It is known, it is understood. Now, they have declining populations. We have growing populations. So those who actually pay for the upkeep are fewer than those who need the upkeep. Those countries have it in inverse. Now, should we not perhaps take a more proactive perspective on this subject, given the burden that we have? Because those, again, paying for these are infinitely fewer than those who need it. Now, those who can form the basis of the foundational structure on which you can then build the future of this business. When you look at it, it looks like they're the consumers. No, but I look at it from a marketing perspective. It's a huge market that is untapped. And I'm saying, forgive me, you people are holding this particular broom from the wrong end.
In terms of reaching out to the younger generation.
No, not reaching out. The reaching out is good. It's on conceptualizing how you ought to reach out. The reaching out, that's a detail of we have a fair, we do this, is good. But it has to be a wholesome thing that is always continuous. It doesn't require a once-in-a-year activity for it to actually make sense. It will be something that people take as a norm and something that they discuss on a daily basis. So the discussion ought to be, okay, so what should I take as a preference? But taking it is a given, I must. Because it's important. It's not...
You are correct that a lot of things are done when someone is a teenager and forms habits that become part of society norms. And this is where where you're giving the proposal of going into even to the depth of curriculum development as a sustainable program that continues onwards.
Yes. We keep talking about how it is we want to empower the youth to be innovative and what have you and what have you.
Yeah.
Your industry is a key cog in that. And innovation and all this thinking, you ask yourself, so what have we done to include that aspect into our curriculum? See, if the business component and the thinking therein is not part of your curriculum from an early age, so when do you want these people to be thinking in terms of business? When they've already made up their minds about what they want to do? Or do you want it to be just part of what they do when they're growing up, so that when they talk about options, it's fairly formed in their minds and they know, and there's certain things they will do just as a matter of course. What do you want to do if you really want to tackle the problem?
Change habits in society.
And when do you start?
At infancy.
Hey.
I'm with you. I'm with you quite a bit. I'm with
So
you.
I guess the challenge here is just for the industry. Yes, there's the regulator, the RBA, which is doing the work that it's doing. But then there's the industry and the role of industry in advocacy and making sure that these things are started much earlier. If the attitude of the industry is not this of sitting back and saying, okay, let's not spend so much effort making the money. So Christine will have her team and they'll be going and speaking to people, and already employment-based pension schemes are big because, among other things, there's a requirement for an employer to take care of their workers and all, and there are these things that we call benefits. So it comes in as part of all that. But if you took the initiative to launch these programs, and there's advocacy for awareness creation. For example, when Christine was leaving university, did she know what she knows today about insurance?
Christine did not know. She's had to build up that knowledge through experience and exposure, which is
and
what...
Christine's age mates who are not in insurance don't have the kind of knowledge that Christine has, right?
They don't. I'm a focal point of reference for very many people.
That's the challenge that we now have. Now then, it makes your work much harder when you're coming to try and sell me insurance, because I'm looking at not insurance, but pension. But insurance, but pension has an insurance. I'm like, what do you want? How much money? For how long? If I put that money in the circle, I can go and get a loan within 3 months. You're telling me 3 years locked in, do that. Too many stories. You see, you have a much harder approach to convince Eric to take up an insurance plan. That point, I'm sure, has sunk, and you've said, yes, you agree. Now, let's talk about the kind of products that we have in the market. Do we have, you mentioned this earlier, fit-for-market products in the pension area, in the pension industry?
I truly believe we do. And this is why. Because what you put in is what you get. The only thing that is added is an income. Now, fit for market is because you've looked at the whole aspect of people. So let's separate the government institution and just look at people who are working every day, whether in formal employment or in informal employment. So they're the employer-based schemes based on company policies. But then I want to concentrate on individual plans. Individual plans are where you're, as an individual, whether you're putting in money from previous employers or whether you're starting as an individual, you put in money. Now, the rules across the market are the same because the regulator is the same. And one of the key things we're very clear about retirement benefits is the issue of governance and compliance in terms of ensuring that people's money is safe. So fit for the client is in this aspect. The timelines are flexible. Contributions are flexible. You do get your tax advantage in that you save on taxation. And then access is applicable. Own contributions are not locked. You can access them. And so if you're saying, I want to do 2 years to save for a car, you do it. I want to save 3 years. And the law does not allow that there are penalties. Those are prohibited. Because it's not risk, it's not insurance. It's pure savings. It's pure put your money, this person invests. Additionally, information is available in terms of performance of different funds. So you will be able to see on the regulator, whether insurance or retirement benefits, you'll be able to see performance of funds. And you'll be able to make an informed decision and say, this person is joking. Again, the fit for market is portability. So here you are, and you feel, I'm not feeling, I go to the website, it's crashed, I can't see my statement. I call, nobody picks my call. Portability, within 30 days, you move your money to your provider of next choice.
So you can move from one provider to another.
You do move from one provider to the other. The other thing I want to say is the security of the funds in terms of it's not considered part of your legal estate. So in the event of untimely demise, as we politely call it, these funds cannot go for administration. So you did fill an application, you did nominate beneficiaries, and with the rules of financial assets as they are right now and financial conduct, those people we do vet and check, and then those people are the people who will be paid this money in the event you're not there.
So also in the event of bankruptcy, this
there cannot be attached.
They will not touch this.
You cannot even assign it as an asset to a bank loan. So there's very high security attached to it. You did talk about SACCOs. Members will look and say, but I can borrow 3 times my money. But then you need guarantors. So also I would say that the industry has really tried. So investments can be in 2 forms. You can have a moderate profile, what we call a guaranteed fund, or higher risk profile, what we call segregated funds. So you find that even the performance of those funds are above inflation. And then when you remove inflation, the real returns are quite reasonable. So you find then you're talking about the guaranteed funds are averaging around 8% for the last, you take a 10-year average. Segregated for us would be averaging around 11.5%. And it's because of the risk profile. So you find that if you're looking at that and you're saying, okay, then I can do this. I save on tax, I get a good return. There's nobody can attach these benefits from out there and come and say this person has a loan or the family is fighting. These issues can go to court.
So there's a great benefit to all these things of thinking the pension route as one way of factoring in your retirement. And this is one that you'd say, when you're thinking about retirement, this then pension be up there, then all the others can come in.
You do have different avenues because then you have different. I think different people have different needs.
Yep.
But the key thing we always say is goal set. A lot of us fail because we don't goal set. As City said, knowledge. By the time the knowledge is finding you, you're 45 years old.
Yeah.
It should have found you at 20, or you should have been an intrinsic part of your life, knowing that you're going to start this at 20. So, yeah.
Goal setting. That's a very important point. Let's say goodbye to our audience on KTN Home. You've been with us since the top of the hour. It's now 5 minutes to 9. We are live on SpiceFM 94.4 Nairobi, Mombasa. It's 87.9. 102.5 in Kisumu, 96.0 in Nakuru, 96.7 Eldoret, 90.9 in Nyeri, and 97.7 in Malindi. Christine Karoki, head of finance, head of pensions at the UAP Old Mutual. The conversation we've been having is about importance of saving for retirement. Please think about it, and like Christine is saying, set a goal. It's important. Start from there. What's the goal? This is Kenya's biggest conversation.
SpiceFM, Nakuru. Mature, intelligent talk every morning. Spice up yourself. Mornings done right. 94.4 Spice
All right,
FM,
4 minutes
Nairobi.
to 9. As we conclude the conversation and say goodbye to Christine, who has been visiting us this morning. The importance of pension, you've told us. What kind of products are these that you have at UAP Old Mutual that you say, okay, so I can consider this, and the other. And by the way, as you were talking about the way I can make money out of this, or how I can get benefits out of this, I remember the conversation we had with the regulator, Retirement Benefits Authority, and there's the issue of using part of your pension to also build a house or own a home. You can mention that as well.
Okay. So, in a nutshell, we have a whole basket, and we are uniquely placed as a company because of the financial acumen. UAP has been around since 1921 or thereabout, the Old Mutual Group, and UAP a bit later, and then there was the merger. So we do have corporate products, and under the corporate products, you have standalone schemes which are occupational, where the employer forms his own scheme, runs his own scheme. Then we do have what we call umbrella products, which is a development way later, 10 years after the law came in. From the recognition that employers do not want everyday running of the scheme, it's quite a task in terms of compliance, time, expenses. So an umbrella product will allow diverse employers to join an already existing scheme. So as the group, the Old Mutual Group, we've set up 2 umbrella schemes, one for the guaranteed and one for the segregated, again, based on your investment profile. And what we do is then you join in and you enjoy the benefits of scale. Say, for example, you join a scheme that is at 2.7 billion. You're investing at that level instead of starting at the first contribution would be $1 million. So your investment would be $1 million if you are standing alone. So those are the corporate schemes. And then we do have what we call the individual personal pension plans. And again, this would cater for either segregated or guaranteed, depending on the choice you have. Now, recent development, there was amendment because the Act did have the mortgage regulations. So there was amendment in 2019, Gazetted 2020. So what they do require is that if you've accumulated a fund, your scheme should amend the rules to allow that as a member of this retirement scheme, you can access 40% of your accumulated benefit to go towards the purchase of a mortgage. So essentially, this was towards linking with affordable housing initiative. And also for general mortgages that are out there. So you find a bank, you're buying a house, it's 8 million. The bank will only give you 5 million. You've got to raise 3 million. And you have a retirement fund of what, 4 million? So if you take that, then you can access almost a million in terms of. So then the scheme, or because schemes are run as trust funds, the trustees of that scheme then would allow that you as an individual will access this money. They will vet, approve, the money will move, and then there will be a second charge on your property. There's a charge for the bank, and there's a charge for the scheme.
Christine, we thank you very much for joining us today. Come again soon. Let's talk about the very many programs that you have, right? And the products. This is Kenya's biggest conversation, the Situation Room. Good morning. It's now 9 a.m.